What is up, my trader homies? It's your boy Kevin from Touchdown Trades, and today we're going to be breaking down Nikola Stock, NKLA is the ticker. We're going to be talking about the rise and fall of this electric vehicle manufacturer. We're going to be talking about this huge move up that we've had over the past few months, and then the turnaround from highs of $100, almost 94, to recently hitting lows of under $30 a share. So we're going to talk about what caused each of the move up, what caused that, and what has caused this recent decline in the stock price. We're going to break down the chart. We're going to break down the catalysts, the news that has caused these moves over the last few months, and we're also going to create a trading plan so that we can profit from this NKLA safely and make some money without risking our accounts. So let's talk about this NKLA and today's Touchdown Trades market analysis. Alright, trader homies. So today we're going to be breaking down this Nikola Corporation stock. The ticker is NKLA. So to begin this video, we need to understand what caused this extreme move to the upside. Just a few months ago, we were trading about $10 a share, and then we had blast off, and we rocketed up over the course of 3 or 4 months to almost $100 a share. And just recently, it has cracked. We had a nice little flag forming. It cracked the base of that flag, and we sold off very hard to the downside, hitting lows of under $30 a share. So what caused this move? What's going on here? And is it ready to be a dip buy trade? Alright, first we need to understand what caused the move higher. Okay, so this move is not normal. Stocks don't typically go from $10 to $94 in just 3 months. Okay, so to better understand this move, we need to take a look at the sector as a whole. And the electric vehicle sector is Tesla is the king of the castle. Okay, so if we correspond the two charts, the Tesla chart, and let's put the Nikola chart alongside it and take a look at the two. The two charts actually do look kind of similar, right? Except for one made a huge run up and has since gave it all back, while the other is still holding up. So this run up in Nikola started, let's say, in May of 2020, right here. Where is May of 2020 on this Tesla chart? Right here. So both of these tickers have been very, very strong since May of 2020. And why is that? Well, it coincides with the strength in the sector. So not only do we have Tesla very strong, Nikola very strong, we also have this workhorse is extremely strong and is actually setting up in a nice, beautiful bull flag formation. And I do like it for a long trade, but that's for a different video. We have, what else? NIO, the Chinese Tesla, very strong since May. Here's May on the NIO chart. So May is the beginning of the electric vehicle sector taking off to the moon. What's another one? AYRO. So in May, it was trading under $1. It hit highs of $8. So the electric vehicle sector as a whole has been extremely strong, and Nikola was kind of a sympathy play, people looking for the next Tesla, jumping on board and riding the wave higher. So what caused the move lower? Well, first of all, we had a public offering filed. What a public offering is, it is the company raising money, offering more shares to be sold in the open market, publicly traded. So what that does is it dilutes the share price. If you only have 100 shares of a company and the company is trading at, let's just be easy here, at $10, so the market cap is $1,000. If you have 200 shares of a company and it's trading at $5, the market cap is still $1,000. What that is called is dilution. and companies will raise capital and it'll dilute the share price and investors get hurt. So if you bought up here and you're holding at $75 average price, you got caught in the offering, it really hurts you. And I don't like when companies do public offerings, but it's sometimes a necessary evil in order for a company to grow. Not only did we have the offering, we also had a pre-order for their the vehicle that they're going to be selling directly to your average consumer. The Badger is the name of the truck. The pre-orders came in a little bit under what was expected. So not only did we have an offering, we had the anticipatory run-up for the pre-orders of the Badger. When it came out that the Badger's pre-orders were a little bit lower than expected, plus the offering, that's what caused this move lower. And we've since pretty much given back, 60% of the move. So not only do we have those two catalysts to the downside, we also have the news that they're going to be building a factory out in Arizona, which would seem like good news, but it's going to be very expensive for the company to do so. A company trying to kind of emulate what Tesla's doing with their factory and manufacturing process, which has proved to be successful for Tesla, but we all know how much money Tesla spent and how much government subsidies they got, and I'm not sure a smaller company with less capital and less resources is going to be able to emulate what Tesla has done. So we have a lot of skepticism regarding the factory, regarding the pre-orders of the Badger truck, and regarding the public offering. So those three kind of negative catalysts have really put a damper on the share price here. We need to break down the chart and check out and see if this thing is bottomed out and see if we can base a trade off of this chart. So first, let's compare the Tesla and Nikola kind of underlying fundamentals to see what we're dealing with here. So let's break these two down and see what we're dealing with. So right here we have Nikola's. So Tesla has been criticized for burning cash, but they have it down. They have the ordering system down where you go online, you place your order, and then they manufacture it and it's ready for you in just a couple weeks or months. And their sales and income have crushed expectations here of late and have really helped the electric vehicle as a whole, the electric vehicle sector as a whole, kind of get kick-started in this latest run-up. And here we have Nikola with basically no sales to prove anything to anyone. So investors are betting on Nikola as a growth story, as a company that is going to grow in the future, while Tesla has been proven to be successful, while investors are still hoping on growth. Now that we know a little bit more about the underlying fundamentals of the two companies, of the leader of the sector and this Nikola kind of a sympathy play, let's take a look at the chart, break it down. I want to look at a 180-day, 4-hour chart, and let's just plot out our trend lines and then see what we're looking at. So we got an obvious pivot down here in the $31 range, what we're trading above right now. There's often overreactions in the stock market that we can use to profit off of. This move higher was an overreaction to the upside, while this move lower could be an overreaction to the downside. But the market can remain irrational longer than we can stay in the game. What I mean by that is if you're a short seller, say at $50, you were correct in saying that Nikola was overvalued at the time. But could you hold your position all the way up to $97 before you stopped out? Probably not. So even though you were right down here at $50, you still probably would have stopped out up here before it hit highs and rolled over down to $30 a share. So this thing could theoretically go down. If you bought today at $33, this thing theoretically could roll over to $20 a share. That's why we have to find levels to risk off of and respect our stops. So I do like this 31.30 level to risk off of for a swing trade. So I'll be looking to buy dips into the $31.30 level, looking for a swing trade back to $40 a share. I'm not saying I like this for an investment because I really don't, but I do like it for a swing trade. I'll show you why I don't like it for an investment. Remember we said Nikola's market cap, $12 billion. Look at this. Ford's market cap, a proven auto manufacturer, not necessarily the most profitable, but a proven company that if they really wanted to trim the fat could become very profitable, only has a market cap of $27 billion. So you're telling me a company that hasn't sold one vehicle is worth half as much as Ford or a third as much as GM. There's just no way, and I don't like this Nikola as an investment. However, I do like it for a swing trade. I like the buy into pullbacks towards the $31 level. And again, we're going to be looking to take profit up towards $40 per share. I hope you guys got something from this video. If you did, make sure to smash like. I appreciate the view. My name's Kevin from Touchdown Trades, the realest trading community on YouTube. None of the fake guru BS. So make sure you subscribe, and I'll catch you guys in the next video. Until next time, peace.
Drop.